You know, the one thing that you did this time, which you know, has become a subject of conversation, the markets also reacted, was increasing STT in the derivatives segment. And I've heard the comments by, you know, your secretaries who say that it was to curb rampant speculation. You know, could it have been done differently, you know, by managing margins or contract sizes? And was it a prudent thing to do at a time when, you know, the global sentiment is the way it is and the markets are also on a weak footing? How do you react to this?
There are many observations that you're making on which opinions can differ.
Yes.
There are people who within India comment saying India's markets are overpriced. I'm not even getting into that debate.
Sure.
The Revenue Secretary made it absolutely clear. It is not for revenue considerations that we've done this.
Yes.
It is not on all STTs.
Yes.
We are only touching on futures and options.
Yes.
Cash is not even touched.
No.
So it is the speculative tendencies. And in fact, the Ministry of Finance has received several parents, elders who call us and say, are you going to sit and watch people lose money? And one of the studies showed that 90% of people who've gone into futures and options have lost money.
Yes.
Of course, the market regulator will also do his or her bit. The institution will do its bit. So we've only tried bringing in a deterrent where speculation is rife. We are not touching the market. Other STTs are not being touched.
No, thank you for that clarification. Let me ask you a slightly directional question. You know, whether it is long-term capital gains or short-term capital gains, in the last few years they have only inched up, when, you know, most of the other taxes have really gone down. So how do you, you know, I'm asking you from a broader perspective, you know, as the finance minister, how do you see this pan out over the years?
I don't agree with you when you say it's inched up. Yes, it has gone up or it is rationalized so that all asset classes can be treated equally.
Right.
And that's the logic and reasoning behind that particular rate change.
Right.
It wasn't done with an intent of earning out of it. But the disparity and the, you know, differential couldn't be sustained. So we had to rationalize it. And in fact, after that we even gave that option to say you choose which one you want to have.
Right.
I remember standing up during the government amendments time, the finance bill passing time. We brought in that flexibility to the people who felt that they were, you know, shortchanged. So that was rationalization. That wasn't for kicking up the rates.
So you think that the current rates are comfortable and
the stable approach towards tax incidence or keeping tax incidence stable,
yes,
has always guided us.
The other overhang for the markets has been this, you know, US tariffs. Let me ask you a direct question. I feel that, you know, there is a sense of things thawing between the two countries. Are we close to a deal?
That's not so much for me to speculate on. Let us see.
But you do think that things are improving from both the sides?
No, the FTAs are being signed, European Union, UK, Australia, New Zealand. So work is going on in getting FTAs done.
Okay. So Donald Trump has said, I think yesterday or day before, that India is ready to buy Venezuelan oil and not Iranian crude. He says that, you know, broadly there is an agreement on the concept of a deal. Would you confirm that?
I would have no idea.
Okay.
Not even in my domain.
Let me move to something else, which is that RBI has reduced benchmark repo rates by about 125 basis points since 2025. But the 10-year bond yields has increased, which means high borrowing costs. How do we tackle this? How do we reduce the cost of borrowing?
I think we are very conscious that yields are going up. Again, without shifting the blame or the responsibility, It is dependent on so many different factors. Yes, crowding in is one of the things on which the market gets heated up and yields can go up. But it's a fact that given the levels of developmental activities which all of us want to ramp up, both central government and state governments, going to the market is one way of raising your fund. But the yields going up also pushes back, and therefore people who want to look at better timing go back without raising the funds. So there is this concern, and that itself could be a deterrent for many states because they cannot afford it.
Yes.
So it's a very evolving situation. We'll have to see how it goes.
Okay. Finance Minister, your party has always stood for a strong rupee. But you know, if you look at the Indian rupee in the last 1 year, it's been on a losing streak. It's almost lost 10% against the dollar, around 16% against the euro. Are you comfortable with this level of the rupee, and are you happy with the steps that the RBI is taking to maintain it?
Let's understand one thing. Our party, yes, was in favor of and is in favor of always a strong rupee, no doubt. But it's also got to be predicated in the context of how the economy is. Economy suffering from high inflation, economy being fragile, and your rupee value also not in a good position, makes it really hard and difficult for everybody. But one thing I can clearly say is economy is fine and fit.
Yes.
Your macroeconomic fundamentals are strong. And that's not to say, look, therefore are you being indifferent to rupee-dollar exchange rate? I'm not indifferent. But I'll also look at it from the realistic challenges that we have to understand where rupee is finding itself now. Reserve Bank is closely monitoring.
So you are saying that you are comfortable with this situation at the moment?
I'm leaving
given
it there. I don't think I will say I'm comfortable, not comfortable. I'll leave it there.
Okay.